The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network. Any questions or concerns about what is said should be directed to the show host, whose information will be provided upon request.
Hi everyone, it's Friday again. I love Fridays because I can come into the studio and talk about some of the things that we've worked on and some of the things that some of our clients can actually benefit from. So I really look forward to our discussions on Friday. Let's talk money 2020. So let's get right to it. Probably the biggest thing I need to talk about first, well, let me just tell you what the format's going to be. We're going to talk about a few things, and then I'm going to get into solving your own tax bills and that sort of thing. So let me just start off by saying a few words about some of these government programs that are out right now. Many of you probably already are well abreast of what's going on, and some people, just need to be constantly updated, and I'm one of those people. I got to be constantly updated, so I'm in that category myself. So first thing is the PPP loans. As we probably already know now, you don't have the 8 weeks anymore. You have 24 weeks to actually spend that money on payroll. 60% of it has to be on payroll. The other portion can be on other things such as rents, loan payments, utilities, and some other small items. So that's going to give you a break. You don't have to do the 75% of it on payroll like the bill initially was. Just keep in mind that you do have to fill out forms. There's a worksheet that you have to fill out for the bank in order to really get the loan forgiven. So what we're going to be doing is this weekend is we have several clients that have already spent their PPP money, and this weekend we're going to complete their worksheet. So first thing on Monday, we're going to contact the banks, and we're going to go over the worksheets with the banks, and see whether we can get these loans forgiven. Now the question is, why am I doing this before the 24 weeks? There are several reasons why I'm pushing to actually get it done before the 24 weeks is up, and the main thing is, just to be straightforward. The reason why I want to do it now is, one, I want to avoid the mad rush. If I wait to the 20th week or the 18th week on up, then I know it's going to be a mad rush to actually get this stuff done. I want to deal with this stuff when things are nice and calm. All right, that's number one. It's probably not the biggest reason, but the second reason I really am pushing to actually get these loans forgiven early is because, hey, what if this happens? Congress were to really get really generous and say, hey, look, if you've spent your PPP money already, we will allow you to do it again. Hey, if they're allowed to do it again, at least my paperwork will already be in, and our clients' paperwork will be already be in. And they can actually start the second round. I'm not saying that that's going to happen. Let me just make that clear. I'm not saying that the government is going to say, hey, look, you can do it again, because right now you can only get one PPP loan. But as things are really slow, especially in the small business sector, and some of these cities and jurisdictions are coming off the restrictions, you never know. It might just happen. It might be wishful thinking, but hey, look, stranger things have happened. So I'm going to push for actually getting these PPP loans forgiven quicker, sooner rather than later. The third reason is, if there is a problem with the way we're actually computing the PPP forgiveness portion, I want to know up front. I don't want to wait until week 22 or week 23 to try to figure out what I'm going to do to actually get my loan forgiven. I want to know right now. So no harm, no foul. I mean, what's the worst that could happen? They tell me that, hey, I'm doing it all wrong, or my clients are doing it all wrong. We do it. Then we'll have what, 18 weeks, 20 weeks to really get the ship back in order. So we want to start doing it now, and I would encourage everybody to actually do it now. And there's a worksheet. I think everybody's really following the same worksheet. You follow this worksheet, and at the end of the worksheet, it tells you what you're eligible to, how much of the loan is eligible to be forgiven. So let's get hopping now. Let's not wait. We don't want to be last minute people. We want to be first minute people, man. Not last minute people. Anyway. Let me move on to the EIDL. Many people have gotten the EIDL. The government was very generous with these loans. These loans are not forgivable, though. You can wait a year before you start making payments. I believe the interest starts to accrue the day that you actually get the loan. However, my research, all the research I've done, it tells me this loan is very restrictive in the use of the loan, what you can do with the loan proceeds. If I were you, the number one thing that I would do, I would put that money into a separate account. That's number one. Put it in a separate account, and then when you need that money, just make it flow into your normal operating account, and then use the money that way. And also make sure that you use the money on normal operating expenses. The way this thing is written, you have to use it to really maintain your business before COVID or any other injury had happened. So it's usually used to maintain where you are, not to expand where you are. I don't think it's really set up to really go invest the money in some other segment of your business. It's not used to do mass advertising to grow your business. I think it's really supposed to be used to maintain your business. Now, let me say that these things probably won't come into question unless you default on that loan. So let's try to do the right thing. Let's try to use the money for what it's intended to do. And please, whatever you do not default on this loan. That's why I'm saying put that money in a separate account. Act like it's not there, and when you need it, just go into it and take it when you need it. But it could be a great thing. I mean, if you are not that established in your business, or you got some challenged credit, or for some reason the traditional banks, they don't like to lend you money anyway. But if you go to the bank and you were actually declined for a line of credit or some other type of financing, this might be your opportunity to really get a sizable loan and manage it the correct way. Don't waste the money. Don't overspend. Be very frugal. This could be in lieu of the line of credit that you would typically get at a bank. So it's not a bad avenue. It's 4% interest. I think it's 3.75% interest, almost 4% interest. And if you went and got some of these I guess these hard money lenders, these guys that call you all day long, their interest rates are really about 30%. They don't call them interest rates; they call them fees. But they're on the lines of like 30%. Can you believe that? 30% to borrow $10,000, $20,000, whatever. So this is a great avenue if you need the finances, you need the money to actually infuse into the business to actually grow that business. At 4%, it's not bad, and plus you're paying it over a 30-year period. So the loan payments are going to be pretty manageable. But like I said before, you cannot waste this money. If you waste this money, if you default on the money, there's heavy collection avenues afforded to the government. You're basically are signing a right to your government assets. You're actually putting a lien on your government assets to actually take this money. It's not an official lien, but it's your property, your business property is used as collateral. What is business property? Well, any asset that you have in the business, it could be cash, it could be accounts receivable, it could be furniture, it could be equipment, it could be just about anything that you consider an asset in the business. It could be future receivables. So the government is really heavy-handed when it comes to defaulting on this loan. Now, I don't know whether they're going to have a process to monitor how you actually use the money. No one has mentioned that, and I don't foresee the government doing that. For one thing, it would be very costly for the government just to go and monitor how everybody is doing on their EIDL loans. But just don't default. Don't get behind on the loans. That's all I can tell you. I mean, under the unfortunate circumstance that happens, you're going to have to come up with a way to make those payments. Just plain and simple. You're not going to be able to get out of it. So make sure that you have a plan to use this money. If you use this money, then you want a return on this money. You know, if you want to use it on payroll, make sure your employees are productive. You know, don't be paying your employees and not getting anything in return on paying these employees. You borrow this type of money, you got to make sure that you get the margins and the returns off of investing into your employees or investing into whatever you're going to do for your business. You know, if you're going to use it for office space, well, okay, let's make sure that you got clients that actually come to your office and actually pay you money. You know, and this is not the time to really get wishful with your business. I don't like wishful business methodology anyway. I don't like, you're hoping money is going to come in. You're hoping and wishing that money is going to come in. No, we need something a little bit more concrete than that. So make sure, it's tough talk, but make sure that money is going to be coming in. Make sure that every dime that you use of this money, you're getting $2 back. Make sure you're getting 2, 3, 4, 5 times the worth of the money. We're in business to make money. We're not in business to really give donations to people. We're not in the business to really just give away all our money. We're in the business to really make money. Now, out of the earnings that I make, I don't mind just giving money away. I don't mind to give money away to people who need money, but make sure you make the money first. Don't use borrowed money to go give money. See, that's not going to work for you. It sounds like a good plan, or it sounds like a good thing. It's not a good plan, actually. Let me take that back. If you borrow money to go give somebody money, you gotta understand you're wasting money, right? And that will come back to haunt you. It took me a while to really realize that. I would borrow money, to pay staff and all that sort of thing. But if the staff is not at a level where, and your business is not at a level where you're bringing in 2x what you're taking out, then it becomes very, very risky to borrow money just to go pay staff. You'd be probably better off just cutting your staff pay, or furloughing the staff, or doing something else. If the employee wants to work a little later, work now and get paid a little later, when money starts to come in, that's fine too. But my point is, you just cannot spend this money or spend borrowed money on things that's not bringing you in money, right? So make sure this principle works for the EIDL. It works for any other type of loan. Make sure that if you are getting money through a loan, make sure that you're at least covering what it costs to get that loan. At least you make sure you're covering over the principal payments that you're going to be paying on a monthly, weekly, daily, I don't know, whatever structure you got set up to pay your loan. Some of these hard money lenders, they want their money daily. They actually hit your bank account every day, and it's not a small amount. I remember one client borrowed probably almost $1 million from hard money lenders. Man, they were hitting his account like $400,000 a month. They were hitting his account daily. So can you imagine? You're trying to pay off this loan, and also stay in business and operate using your normal operating expenses at the same time as paying $400,000 a month. That's a drain. That's a recipe for disaster. So you got to be careful with these loans. I cannot express how much you have to be prudent. You have to be a great planner when it comes to some of these loans. So anyway, that's the talk I want to talk, things I want to talk about with the PPP and the EIDL loans. There are some other things out there, grants and there's some other grants that are still out there. The economy has not recovered fully, and we're still living under a lot of these restrictions. But hopefully, things can gradually return to normal. So let me just move to my topic that I really wanted to talk about today. We're doing a lot of negotiating and helping people with past debts. This time more than ever, it seems like people are more conscious of the tax debts that they have, and a lot of things have really, started this. For one thing, a lot of people needed to get old tax returns in if they were trying to get stimulus checks. They're trying to get old tax returns in to make sure that they get some of the other government programs. So, having people focus on taxes and past tax returns has been something that has been, boosting our business these days, because we see a lot of people who want to really go in and negotiate old taxes. They want to stop liens from old taxes, and just really just get themselves in a better position, because it's not fun to actually have these tax liabilities. And you go to bed at night thinking about how, my God, the balances are increasing. I got this letter. I'm waiting for the letter. And these taxes are going to come. So, there are certain things that I think you should know before you go spend an ungodly sum of money trying to fix some of these taxes. Some of these things you have to spend money anyway to fix, but some things you can basically do on your own, or at least have knowledge of these things, because what I find is a lot of people, they kind of hide when it comes to owing taxes. They'll hide for years and let balances just accumulate, but I can tell you now, it's not the best thing to do. The best thing to do is just go in and face the problem, just hit up. So there are certain things that you might want to think about, especially if you got real old taxes, and because we're seeing a lot of clients with real old taxes, that you have to be conscious of several things that are going on. For example, if you have not filed the tax return, the IRS, at times and quite often, they will file a substitute return for you. So just suppose you did not file your 2007 tax return, and the IRS comes in 2009, and after waiting and sending you letters and whatever, that you need to file taxes, and you ignore those letters, well, the IRS will do a substitute tax return. They will take the available data, they'll take past tax returns, they'll take other people in other type of situations, and they will actually do the tax returns for you. It's usually not the best tax calculation that can be afforded to you, so you probably end up paying more if you let these IRS actually do a substitute return for you. So but if that were to happen, then probably the best thing to do is look at the years in which the IRS has actually substituted the return for you, and actually go on and file your return on your own, because in most cases your return is going to be a lot better than what the IRS actually files on your behalf. So probably one of the best strategies you can do is just file those old returns that you got substitute returns on, especially if the balance is a lot different than what the IRS actually has in their system. That's a quick way to actually get your taxes reduced. Now, if you're facing liens and that sort of thing, it's really kind of difficult to stave off the liens, but at least get your taxes in to kind of reduce the amount, so you have an argument that, hey, look, the lien amount is not right because we're going to file taxes, and we can actually reduce the lien amounts. That's a strategy that we take, actually. So if you're up for a lien to be placed on your assets, then you can actually appeal that, and then you could just file those substitute returns and get the lien kind of held off a little bit until you have a lower balance, and then you can start negotiating, a payment plan or whatever. And you might be at a point where, if you do your negotiations really in a crafty manner, you might not have those liens at all. So we can help you out with that. Let me give you our number: 301-474-1040. Call us anytime. We can help you out with that kind of stuff. But the moral of the story is, if you got substitute returns, you got old returns that you somehow did not file, you were afraid to file, you knew you were going to owe, blah, 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 blah. There's so many different reasons. Then you can actually get those substitute returns in. I would highly recommend that, especially if the difference is a lot different than what the IRS has. The next thing I want to talk about is statute. So what we do is, if you come in and you got these old taxes, we do a statutory assessment where we try to figure out whether some of the taxes will actually eliminate on their own. Because in the IRS, there is a 10-year statute of limitation, right? So we look at from the time you actually filed the return or the time that the IRS did the substitute return on you. And there's a 10-year statute on any assessment that's actually on your account. So in a lot of cases, the 10 years will run off, and 10 years 4 months, 10 years 5 months, the IRS will actually drop that liability from your account. Now, let me just say this: the states don't have a statute of limitation. So if you owe state taxes, those have no statute of limitations. However, I think if you really have serious taxes and bankruptcy is in play for you, and we can help you with that decision too. We have plenty of bankruptcy lawyers that we actually work with. If bankruptcy is the ultimate thing that you have to do to actually get out of paying those taxes, then any taxes that are older than 3 years can be dismissed in bankruptcy. But if you got a tax that's 3 years or newer, then you cannot get out of paying those taxes out of bankruptcy. But that might be a strategy for you as well, to actually get out of paying some of those taxes. And then they're just offering compromises and all kinds of things. But I guess my moral to the story is, get started. Don't be afraid to actually call the IRS, because a lot of times you call them yourself. They're going to ask you certain questions like where you bank and that sort of thing. You don't have to give them the information if you don't want to. Just say, hey, look, I don't feel comfortable giving it to you. They got to move on. Their job is to collect the money, man. So don't be afraid of the intimidating questions that they might ask. You're perfectly within your right to say, look, I just don't feel comfortable about giving you that information. And they can't say, okay, well, I'm sorry, I can't go any further with you. No, they're just not going to do that. But it's up to you to just stand firm and say, look, I'm not going to give it to you. I don't feel like giving you where I bank. What's my best number to reach you, and all this kind of stuff. You're under no legal obligation to give them any of it, right? But it does help you, if you do want to resolve some of your tax issues, not be so standoffish, because the human nature starts to set in on the person on the other side. If you really are, closed-minded, you don't want to deal, you don't want to talk to the person, you're not being nice, you don't look like you really want to solve the problem, then naturally that person is going to get an attitude where they're not really trying to help you either. So you got to keep that in mind now when you say, hey, look, I don't feel like giving you that information, but I will talk about anything else that you want to talk about, but I just don't feel like comfortable about giving you my phone number. That's a little different, right? It goes over a little differently, right? So make the call. Make the call. You don't have to wait on a tax professional to actually make the call. You don't have to wait on these guys you see on Optima Tax and all these other guys you see hear about on the news. You don't have to wait for that. Make the call, man. I mean, just brave up. Make the call. I mean, they can't come through the line and do anything to you. They're not going to be knocking on your door as soon as you get off the call. That's not the way the IRS works. So make the call and see where you are. I mean, they may just put a hold on your account and just say, hey, look, give us some information. Give us what's called a 433F or 433A or B. And they say, hey, look, on these forms, you're just giving us all your assets, all your liabilities, more about your life story, so we can determine what's the best strategy for you to actually take care of your taxes. In most cases, it's going to be some type of payment plan. But that's not bad too. Just to get yourself on a payment plan, and you might have a long-term strategy to really how to solve the problems. Just get yourself on a payment plan to get yourself in compliance. Make sure that you're actually paying the taxes, because the key thing is, if you look like you're trying to take care of these things, when you go to actually really solve these issues a little bit later, they're going to look at that and they're going to say, hey, look, he was really trying, he was really giving forth the effort, he was filing his taxes on time, he was trying to pay on time, he just had some extenuating circumstances that stopped him from really paying off the taxes or getting his return in on time or whatever. But if you look like you're going through the motions, then people they're willing to work with you. If you're a guy who just never filed taxes, you owe these huge tax liabilities year after year, and all of a sudden you want somebody to come help you out, then you don't look like a person that's trying to really help yourself out. So they're not going to try to help you out. They're going to give you generic information, right? But, make the steps to do the right thing. You're going to have to do it at some point anyway. You can't run forever. So you might as well just do it now. Just do it now. So no stalling. If they can look in the system, they can see, okay, you promised this on one day, that day went by, and you made another promise, and that day went by, and you made another promise. You get what I'm saying? When that person is actually reviewing your account and they see all the stall tactics there, they're hardening their attitudes, they're hardening their position about how to really help you. So just because you can get things delayed over and over and over, it doesn't help you in the long run. I believe in just attacking the problem head on. Just attack it head on, man. I mean, just go for it. To me, you get a lot more leeway with people when they see that you're willing to take care of the problem without stalling, without making excuses. Just take care of the problem. It'll help you out 9 out of 10 times, right? If you don't have returns that you filed and whatever, just get them in, man. Just get them in. Get that liability down as low as you can. Just get them in. They got tax professionals like myself. We can come in. We can help you out as far as communicating with the IRS, a tax strategy with the IRS. We can do a lot of things that can help you out and just alleviate you of the whole situation, because you got to sleep at night, right? You don't want this stuff to be hovering over you. You want to buy a house, you want to buy cars, you want to have business credit and whatever. So attack the problem. Just attack the problem, okay? Be nice and attack the problem. So they're going to ask you for certain forms to actually fill out when it comes to your personal assets, your earning potential, your liabilities. One thing I would recommend is, if you got state taxes, go to the state tax people and actually set up a payment plan with them first. I would do that first. It sounds a little backwards. I know it sounds backwards, but I would do that first. I mean, and this is the reason why. Because when you go to give the monthly financials for the federal, you can just include the state taxes on those applications and say, look, this is an obligation, a real obligation that you have to fulfill. And they're not going to say, okay, don't pay the state. No, they're going to say, okay, well, he does have state taxes. Let's allow that as an allowable expense, okay? Because you'll have an agreement, right? So you're going to put that onto your documentation when you submit it over to the federal government. Just a little tip that I'm giving you here. Any legitimate debts, you want to get those kind of squared away first. Any court ordered type debts, things that have security interest involved with them. You have collateral, you have a debt on a house or a car or whatever, and you have to pay for those things. Hey, look, you got to get that onto your federal paperwork. Because what they can do is they can actually disallow some of the expenses that you have and say, okay, well, no, you owe me more money because you have the wherewithal to actually pay more. But if you have your agreement's already in line where you say, okay, this money is spoken for, well, they can't get that money, right? Well, they shouldn't get that money. I mean, legally they can, but will they? Probably not. If you have a legal binding document like an agreement with the state to pay the states off, student loans, if you got these legally binding type things, security interest on your house, you got to pay your mortgage, whatever. If you have all that stuff in line, it's going to help you in your negotiating with the IRS a little bit later. So we'll talk a little bit more about this. I don't want to belabor the point any further, but let's talk about solving your own tax debts, and we're here if you need us. We can definitely help you out with a lot of things, but we don't want you to have these lingering tax problems. We don't want to see you year after year accumulating debt. We want to see you live in a better space. A better space for you means a better space for your family and everybody around you. But if you're carrying all this debt and it's accumulating, it makes you insecure and it affects your ability to actually maneuver in this world. So let's get this stuff cleared up. But anyway, we'll talk more about the technicalities of how you actually start to clear up some of these tax debts. We'll talk about those in the coming weeks. So until that time, let's be safe. Let's do some serious work, massive action. Let's just go on and just do what we got to do. Don't make excuses. Let's just tackle whatever problems we're having. Let's just go for it, man. Just go for it. Braving up. Just brave up and just go for it. Anyway, we'll talk next time. Stay safe. I'll talk to you soon.